Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation.
Good morning, everybody. Happy Easter. What's up, Sufi? What's up, what's up, what's up? Give it a minute, let some people hop on. How's your guys' weekend going? For those that celebrate Easter, how's your Easter been going? What's up, Sufi? Yeah, we got a decent amount to discuss today. So, Fritz, what's up? What's up? Happy to see you here. Your volume is low. Let me see. Yeah, I think. How's that? Is that better? Yeah, I wonder why it's low. Kind of seems low, huh? Is it okay now? Yeah, I see it looks kind of low here. Is it better? Yeah, let me know in the chat if the volume's okay. Yeah, I don't know why it's showing that it's down a little bit. Is it still low? Let me see if I can fix that. Wonder why. Very interesting. Yeah, tell me if y'all could hear me okay. What's up, Eddie? But yeah, if it's yeah, let me know in the chat. So Eddie says it's good, Sufi says it's good. Okay, Fritz said it's much better. But yeah, I'm not sure. I'm not sure why. Not sure why it sounds like, or looks like it's a bit low. Let me see. But yeah, if y'all can give me one more confirmation, I just like adjusted some stuff. So yeah, one more time. Still kind of low. What's up, Trey? Long time no see. If it's the Trey I'm thinking of. But yeah, how can I 5 out of 5? Okay. But yeah, Sufi, you said it's still a little bit low. Is it still low right now? Damn, I'm not sure. Normally it's like slightly clipping a little bit. Oh, what's up? What's up, Keyshawn? Be all good. All right, for sure. All right, well, so as always, we focus on the economic calendar first, right? We got to see what economically is going to take place in the U.S. economy. Obviously, there's nothing chaotic taking place. There's going to be Wednesday, right? There's going to be PMI. That should be pretty interesting. Should see some fireworks at that moment. FOMC, obviously, as we know, there's always something going on when it comes to that. So Monday, there's no news. Today's a holiday. So day before, day of, and day after holidays is generally low probability, low volume, low volatility. So we're going to keep that in mind, and obviously drop our risk. You know, those of you that are here right now, you guys have been with me for a while, so you kind of know how we behave around times like this when there's expected to be low volatility, low volume. You know, generally we drop our risk by half, only take one trade, two max, already with a cut risk, right? Because we're not gamblers. We like to come in and be very precise, and generally that's the case. So when things are promoting less likelihood of that phenomenon taking place, we want to protect ourselves, because why hurt ourselves in moments in time where things could be a little less likely to play out, right? Or offer things the way that we want to see them play out. All right, so we're going to keep our eyes on Tuesday, Wednesday. Thursday, we got unemployment claims. That should be pretty interesting. As you guys hopefully know by now, unemployment claims is like one of my favorite news events to trade, just because it has volatility but doesn't have chaotic volatility. It's just like an injection of volume. Like, you could really read it pretty good after a while too, especially if you can get a grasp of how the labor market is in the U.S. economy. Right, you could just look at some of the data, kind of catch some headlines, get a view of, you know, what's going on. Are people getting laid off? Is the job market healthy? If it is, a lot of times when this comes out, it's good news. So, you know, good news doesn't necessarily mean price will go up, but it does mean that there's volatility injections that take place. And if we can get a grasp on narrative, where price is headed, which we generally do, we're able to then get in line with whatever it is that is offered at that time. So yeah, we're going to keep that in mind. Again, Monday, we're going to be very cautious. Tuesday into Wednesday should be pretty eventful, and Thursday as well. Those are our three main trading days anyways. So we're going to keep our eyes locked in on those days. All right. So on to the next assets we look to observe. Okay, so I've been talking about this down wick and the fact that prices displaced lower for a while now. So prices return back. This is exactly what we want to see if price is going to want to continue to drop. I wouldn't be surprised though. This is the weekly chart. I wouldn't be surprised if we open up, try one more time to hit up into this wick. But overall, it still looks like we're looking to attack sell-side liquidity. Okay, so it looks like we're going to probably target this low, maybe even target this low. Obviously, you know, this low is before that one. So if we can get a response higher, right? So the next candle that opens, hopefully we can reach higher into this wick. I want to see this act as a brick wall or a balanced price range, you know, however you want to classify it as. And then once price gets in there, there's going to be strong justification if we can get displacement away to then look to get in line with something like this down here. Right, and obviously these are all correlated, right? It's like the same asset class, just different time intervals that we look at: 5-year, 10-year, 30-year. That's what the T-bonds are. We don't really see any SMT. That's a critical thing that we want to observe. You know, this high, if we look at this and we look at the line that's carried over to the other charts, you could see they both, or all three of them, ran through the buy side liquidity, and they've reacted the same way, right? They've reacted to the downside. That is supportive of the indices dropping lower and the DXY rallying higher. Okay, so we want to continue to support that idea by observing what this is doing. If this is going to continue to seek sell-side liquidity, that is influencing the indices to want to go lower, and it's generally going to be a positive thing for the US dollar. As you guys also know, we've been talking about this for a while now also, all the things that are happening, from tariffs to, you know, all these other things, bringing jobs back to the United States, all these different moves that are being made in the U.S. economy, they're all good for the U.S. dollar. They stimulate the dollar, right? They strengthen the dollar. And if we see this dropping, that's an indication that that's strong for the dollar, right? But it's something that also combats inflation, when we combat inflation, if we're coming off of an overheated market that was very inflationary, a lot of times when we start to combat that, the stock market takes a hit, right? So it's normal to see what has happened in the indices and stocks across the board to drop when inflation's being fought, especially if we're coming off a very inflationary moment in time. Okay, so we got to keep that in mind. With that being said, that supports this acting as a break in market structure, continuing this downside delivery. So we're going to seek this sell side down here, and we want to watch and see if that's going to be something that could be supported. I'd like to see price again rally up, come up into this. If it fails to get up there at all, and it just maybe wicks slightly but fails, maybe this next candle that opens up looks to trade into this wick a little bit. This is the previous week's range. So this is the previous week's high, previous week's low. Large ranges lead to small ranges, but small ranges will lead to large ranges. Okay, so maybe this candle that opens up for the next week ahead of us, maybe it opens up, rallies a little bit, tries to trade a little bit further into the buy side, but maybe it's going to fail and respect the midpoint of this, then give us a displacement. If that takes place, these lows are most likely going to be attacked this coming week. If not, maybe price wants to, hang around in here. It is the end of the month, right? It's not entirely the end of the month, so there is probably, a likelihood that we could still maybe push lower a bit. But, we'll see what happens. I wouldn't, again, be surprised if we do rally up, sweep the high. I prefer it doesn't do that. But if it does do that, we still have this wick to watch to support downside delivery plus this fair value gap. And obviously, if those are violated and price starts to really ramp up to higher prices, we may see a change in the overall state of things. But for the most part, nothing has promoted us to want to buy long term. Any buys are short term in nature, clearly. Every buy that's been set up, except some of these, have generally resulted in strong downside delivery. These obviously were heavily manipulated to get above the buy side, just so they could sweep it and then decline. That was all seen ahead of time or programmed ahead of time. That's how you can make justification for this huge drop here. This has been anticipated with the tariffs and all the stuff taking place, right? So all this stuff, again, it's pre-programmed. Nothing is random in the marketplace. So this is to be expected. Given the fact that they gave up the ghost here, they kind of showed their hand again, and then they left these equal lows. Of course, this rally came off of this SMT here at the lows, very slight SMT, but nonetheless, it's given up what it really wants to do here. And again, that changes when we start to see this midpoint of this wick violated. This is a balanced price range. If that ends up getting totally disrespected, the fair value gap gets totally disrespected, and then we just start rampaging away from this order block here, those are all indications that we may not be done with the buy side. It may look to leave the sell side and head higher. Until this level's violated, this fair value gap's violated, and even up into the middle portion of this order block here is violated, I'm going to continue to press lower. And then, of course, there's deals still floating around that we haven't finished yet that have to do with the U.S. economy, with tariffs and all these other things. So there's still a lot of uncertainty going on in the marketplace. The marketplace, in terms of stocks, doesn't like uncertainty. So for the most part, that'll lead to price wanting to drop, which is a good thing if you're a long-term investor. And if you're a day trader, who cares? Okay, because we trade both sides. It doesn't matter where it goes. We'll be able to nail something down. Just the benefit that we have, given the skill set, we have or are learning to have. So that's my thoughts and opinions for the bonds. Okay, again, this dictates and influences in a heavy way what the indices are going to do, and it's reverse correlated, reverse impact to what happens with the DXY. If this goes lower, we want DXY to go higher, and then vice versa. If this goes higher, that influences DXY to want to go lower. If this goes lower, this impacts the indices to go lower and the foreign currencies to go lower. But if this goes higher, that's going to be positive, right? It's going to want to push the indices and the foreign currencies higher. Okay, so that is the overall relationship when it comes to the bonds versus the stocks. the overall stock market, and then indices and foreign currencies. But then it's also what it does for the DXY. Okay, so that's why this is where we start. That's why this is so important. That's why, you cannot overlook this. And if you do, you're missing a critical element, a critical piece of the bloodline of what makes the markets move and why they move the way that they do, okay, for particular assets. In this case, U.S. assets, all right? And then how that impacts like foreign currencies and whatnot, right? So again, those are my levels I'm looking for. Very simple. Explain. Hey, I'm glad, Sufi. I'm glad. I try to make it as simple as possible, yo. Like, we don't got to worry about what the bonds do with the interest rates and how that affects mortgages and all that stuff. That's great if you want to dig into that. I mean, it's interesting if you're like me and you want to know, the inner workings of all the different stuff, the complexities and whatnot. But yeah, it's not necessary if you're just trying to be a day trader. If you just want to focus on trading, how this will affect you in your trading, how it can impact you, then that's all you got to focus on is a relationship. Right? What assets does it impact? And then how that'll help you come to an educated understanding of what decisions you should make and what ones you shouldn't make. What you can trust, what you shouldn't trust, so on and so forth. All right. So yeah, that's pretty much in a nutshell all we have to derive from this asset class. Drink some water real quick, or juice, whatever you want to call it. So with that being, do you guys have any questions about this real quick? Before we move on, we're going to kind of fly through these because a lot of you guys on right now are here regularly. So hopefully this stuff's starting to click, fairly easily. Right. But yeah, let me know in the chat if you have any questions before I move on. Hopefully it's making it too easy to... Hey, it is what it is. That's the good thing, yo. Discount premium supports small retracement back up. So, given the fact... that's a good question, Fritz. I'm glad you asked that question. Because someone else is going to probably watch this video and think about that, right? So, from this low to that high, we created this as a bearish breaker, okay? Because sell side was delivered and it took sell side. Buy side was delivered and it took buy side, and we aggressively smashed through this low. This becomes a balanced price range. So if you wanted to identify from this high to that low in terms of premium and discount, the premium aspect of things is a little bit too deep into the balanced price range, right? Of course, there's a chance it could run up there, but if we're going to be bearish as much as we want it to be, and it's going to show us a very strong interest to want to run lower and not spend much time up here, we're going to want to see a failure for price to want to get up here because, again, this is a balanced price range. First of all, because it's this large wick overlapping the gap here, which generally creates a balanced price range, but it's also a bearish breaker, which is in itself a balanced price range. So when things like that are occurring, you're not going to expect it or want to see it run too deeply back into a premium in this case. Yes, exactly. 100%. Exactly. It shouldn't go higher than the consequent encroachment of the wick, the fair value gap, and the upper portion of this breaker, which we can also break down and identify a little further on these lower time frames, like 3-day, 2-day, so on and so forth. Okay, so that's very important, a very important distinction. Notice how on this weekly chart, like I said, there's a possibility for it to want to come up here, but again, we have this here, an inversion fair value gap, right? Price beautifully traded to the midpoint of that, okay, and it's rejected off that. If we drop down to this 3-day chart, you can notice how price has already delivered into a fair value gap. It's also delivered into the breaker. It's also overlapped with this weekly inversion bearish fair value gap, okay? So these levels should hold in price. It shouldn't have to want to come up there. It's already did a lot of delivery. This hopefully could be left as a breakaway gap. If we get a displacement, that'll confirm this as a breakaway gap, and then we should be able to attack the sell side fairly easily, assuming that things are going to go from this small range that we had last week to a large range delivery to blow this out. And again, we're approaching the end of the month. So if it refuses to want to give us displacement again and we have another very choppy week, then so be it. Okay, that we're just going to have to deal with that. We've dealt with that for the last week. I've kind of talked about how to deal with that in my private community and somewhat on my YouTube channel as well with the Tuesday call. So yeah, that's going to happen at times. And it's very important to learn how to navigate that stuff. But again, the rules, the non-negotiable tactics and ways of thinking about certain conditions, identifying the conditions and knowing how to manage your risk within those conditions, all that stuff will allow you to survive when moments in time arise where price is not going to be very interested in getting to one place or another in a very fast capacity, which is what we want to be a part of. You know what I mean? But sometimes it's not going to show up. That's where discipline, the level of organization you have in your process, that's where that stuff's going to come into play. And that's why I talk about that stuff so often, because it's going to happen. It does happen periodically throughout the year, over and over. So you don't want those moments to be times where you look back on your performance and you either blow your account, you lose like 6 months of gains because you didn't want to follow the rules or you didn't have any rules. I make it very hard to admit to yourself that you don't have rules because I mentioned like many of them over and over and over and over. So at the end of the day, if you go through some of the stuff that I talk about, if you spend time here and you hear me saying things over and over, but yet you go out and blow your account or you break the rules and something bad happens, there's no one else to blame but you because you were already told. And I'm hoping that reinforces, if that does happen, I'm hoping that the fact that you guys have heard this stuff over and over reinforces the need for you to have rules and implement them, even if you break them at times and you have to go through the fire. I know I had to go through the fire. I didn't want to listen at first, okay? And unfortunately, it was chaotic and it was a mess and it was all my fault. I didn't want to admit it at the time that it was my fault, but the market's going to force you to take accountability, especially if you have people trying to get in your ear and tell you certain things have to be done in certain ways. So I hope and pray that, most of you guys don't have to go through the fire because you don't have to learn these lessons through getting beat up. You just have to apply them and witness the benefits, and then it'll be able to be easier to apply the non-negotiable rules that we talk about all the time. So you can prevent yourself from dealing with the massive downsides that are unnecessary to learn specific lessons. Okay. So yeah, again, we'll see the first targets we're going to have. Of course, we have this fair value gap. We have the midpoint of this wick, which is also a bearish breaker. So if price does want to, spend a little bit more time here for whatever reason, that's okay. First target I would be looking for to pair shorts with, if I'm just looking at this time frame for the weekly range, would be this, the weekly high and weekly low. If we're going to end up targeting these lows down here, which is what I would like to see, the first targets are always going to be the previous week's range, right? Because if it's going to reach up here and switch from bearish to bullish, the first target it's going to have to reach on a higher time frame. If we're just looking at the weekly chart to come to figure out our narrative, it's going to have to blow out this high first before we even consider any of these upper levels. And then, same thing is on the other side. If it's going to blow these lows out, it's going to have to break through this with the next candle if it's going to end up trying to target the sell side. So it only makes perfect sense to make sure that this high of the previous week and this previous week's low is our first target if we're just looking at this time frame. Then, of course, if you go to the daily chart, outside of that, right, which is here and here, outside of that, you also have Friday's high and Friday's low. Friday's high and Friday's low is very useful as well in that same fashion because if we trade on Mondays or if Monday and Sunday we're kind of just inside this range, doesn't want to break out at all, maybe it's going to save the breakout for later in the week for like FOMC or PMI or CPI, whatever news event. Maybe waiting until that moment in time takes place, maybe price stalls out and just kind of trades inside Friday's range, right? If that happens, then Friday's high and Friday's low again can end up being a target. A lot of times we'll start the week off, price will run against the previous week's delivery, either take out previous week's high if we're bearish or Friday's high if we're bearish, and then it'll be permitted to want to start delivering towards whatever target, in this case possibly the sell side, possibly this previous week's low here, like we talked about. So I say this to highlight early parts of the week liquidity identification. Okay, you want to always look at the weekly chart, monthly chart as well, every new month. And I mean, you could move up to the monthly chart to see, are we close to any previous month's high or low? Right? If we are, right, if price is down here and you see that this monthly low is here, I mean, that's a reasonable idea to anticipate as a draw on liquidity potentially, if price action permits you to seek sell side. Okay. But again, that's one layer. Then the second layer obviously is the weekly high and low, like I mentioned. You get a feel for that, figure out what all the stuff that we talked about, identify PD arrays, previous week's high and low, any highs and lows from previous weeks that are in close proximity. And then of course you can also drop down to the daily time frame and identify Friday's high and Friday's low. So then when the week opens, you have liquidity just mapped out, by default. That'll never change. They're always there every single week. You could always identify these things. And, the more that you identify them and study them, the more helpful they'll be because you'll start to get used to how price uses these levels, right? And then again, if you have a larger time frame target like these lows down here, again, there's earlier targets you can identify to frame a setup off of, So again, this is just kind of highlighting liquidity mapping, identifying, PD arrays that are important, talking about, balanced price ranges. We're going to probably talk about that conversation every call from this day forward. Okay. Cause it's that important. And I've already started talking about it, so I might as well just keep, pouring into it. Right. So, cause it's present every day, all day long. It's on every time frame. It's extremely helpful. It's what most of these PD arrays are in general. And it's a very, very strong assistant in identifying whether something's going to hold or not, or whether it should hold or not, okay? Or whether something's changing, right? If balanced price ranges, opposed to what your narrative is, start getting violated, like, price just displaces through these levels up here, obviously something may be changing, and if you understand the dynamics behind the price delivery that it's breaking, obviously it's a little bit easier to start building trust around particular adjustments and different ideas, okay? Rather than just thinking, oh, this is a higher high. It broke the higher high. It's like the basic thought process. This takes it a large step forward further than just, identifying random highs and lows and random PD arrays and so on and so forth. Okay, so again, I hope all this makes sense. See in the chat, you guys saying this makes sense. So, okay, so with that being said, let's move on to the yields. And again, so the yields dictate or heavily impact what the DXY should do. Obviously, the last couple of weeks, there's been a cracking correlation across the board because of all the chaos that's taken place. Well, I shouldn't say chaos, the changes that have been taking place, right? And again, the necessary changes for the U.S. economy that are taking place, right? And that's obviously sent shockwaves. Been a little scary for some, but been massive opportunities for others. And, that's just how it's going to be. But, so we see that we've had this strong displacement to the buy side here. Similar to the analysis that we did using the other asset class, we're going to do the same thing here, right? Let's take some of this off. So we got previous week's low, previous week's high. We have this large high up here. There is SMT on this one, bearish. But again, I will not trust this SMT until it proves itself because, this was a very strong move here. It's too aggressive for me to just all of a sudden think, okay, well, this took the high here. Because it's an SMT, we're going to run all the way down here. That's a stretch. We have to see more evidence. We can't just assume things and pick highs and pick lows. It's picking tops and picking bottoms. And generally that doesn't end up well. Especially when we got the bonds doing something opposed to this, which is what we want to see. Hopefully things get back in alignment and start to be a little more clean. But we're leaving the equilibrium from this high to that low. Okay, you map that out, equilibrium somewhere in this vicinity. We also have this large wick similar to the bonds, but this is running to the buy side. So again, it's very similar validation points, right? We have this fair value gap in here overlapped with this wick. We got this mid portion of the wick. We have a volume imbalance on this one. And then we have the order block in here that may look to hold price as well. But if price starts to get down into this area over here, doesn't respect any of these, I mean, that's already given us red flags, that things may get disrupted to the buy side and start tipping over and going lower, right? So we're just going to have to see how that's going to behave going into the next week. I'm assuming that given what we see here, price is going to want to continue to go higher. Okay. But again, we'll see what happens, right? But given what we see currently, that looks to be what price wants to do. Plus we have this very large SMT here at the lows that led to this rally up. So again, it's just all evidence that price does still want to rage higher, and that's what we're going to stick to until proven otherwise. We need evidence on the higher time frame that a narrative has changed. I don't care what the 1 minute says, the 1 hour says. I don't care. If the daily and the weekly, sometimes even the monthly, doesn't promote a change from one direction to the other, meaning 3 PD arrays get violated, price is just completely taken off on those higher time frames against whatever narrative we're in. If that doesn't happen, we stick to the narrative. If it's going higher and it gives a retracement, that's all it's going to be classified as, especially if it looks like this. And we can make a strong argument as far as why price is going to go higher or lower, right? In this case, going higher, right? So our invalidation levels are somewhere down here. The fair value gap, we have a volume imbalance, and we have this large wick. Midpoint, right? Breaking the midpoint of that is something I really don't want to see if we're going to be as bullish as I think it's going to be. Again, this going higher promotes DXY potentially wanting to run higher. So we're going to keep that in mind, although things have all been dropping in the US because just a lot of change at once scares things, so it is what it is, and that's just something we have to deal with at times. But again, that doesn't change the principles that we've been talking about here that we continuously talk about. Okay. If we look at the month, let me look at the chat. Monthly looks, yeah, exactly. Nothing in here screams bearishness. But if you kind of look at these the other assets, aside from the 30-year, I mean, it does look like we're still stuck in a very questionable range. This is a new monthly candle. It has opened up, dropped lower. SMT, as you could see, fair value gap, as you could see in here too. And the prices pretty aggressively ran higher. We have relative equal highs up here too. We've left somewhat relative equal highs up here too. So it is a little bit questionable. We do have this order block midpoint. It's ironic that this midpoint of this bullish order block is probably in line with this wick here. Very, very interesting. I'll leave that to you guys to go dissect a little further. But yeah. So yeah, that's my opinions. It's very similar to what the bonds are, but just the opposite because it's how things are supposed to be. And again, this impacts where the DXY is going to go for the most part because currencies chase yield, okay? And if we're looking at the DXY, that's going to chase the 30-year bond yield market or the yield market, right? And then the bonds, normal bond market, the T-bond futures, that are the treasury notes, right? However you want to classify them, the stocks and foreign currencies will chase whatever this is doing as well. Okay, so that relationship again, it can't be understated. A lot of people don't like to use these things because for whatever reason. But if you're taking my advice, if you're here to learn what I do and what I showcase, and you want to implement some of the things that have helped me become successful, then obviously you're going to want to take this stuff to heart, at least consider it, and go attempt to utilize it in your own trading, no matter what style you use. You use this and trade trend lines and other things, it'll still give you some type of benefit. I don't promote you to do that, right? Trade those ways. But hey, to each his own, right? So yeah, that is my opinion on the bonds and yields, okay? And yes, so let's move on to the currencies now. If we could pull this up real quick. If it'll load, right? I'm not sure why it's frozen. Half the screen's frozen. That's interesting. Well, I guess we'll do one at a time then. That's all right. All right, so if we look at this, we've talked about this being in a market maker buy model. It did respect the balanced price range down here, which we've been talking about for days on end, like weeks on end, I should say. We've been watching this for weeks and continuing to support buy side. The analysis that we've done on this asset, I mean, just overall, the analysis kind of speaks for itself. And just if you guys have been here for a while, I mean, you've seen just, it's incredible. But this asset and the analysis we've done on this asset, even though I don't trade it personally, the things that we've talked about, the levels we've watched hold in price, the levels we have watched to use as invalidation, validation points, and the trust that we've put behind the delivery we've seen when price hits specific areas but rejects away. It's a beautiful display of the efficacy of what we do here, right? And just the overall efficacy of ICT concepts. And when they're used properly, how effective they can be and how trustworthy your trading can become. Okay, price was a bullet phase bearish candle here at one point. All of you guys that are with me continuously know for a fact, right? And if you've been here and you were watching this, which many of you guys on the call have been, not one time through the delivery in there did we say, okay, we're going to be bearish now. Not one time. We said there could be a likelihood if we break outside of this and use this as a rejection point to go lower, that would indicate that we would then target sell side. But that was a very, very small conversation. It was only mentioned like twice, right? Because it didn't spend much time down there, right? And it just started ramping higher, you know, just really, really smashing higher. Then in that case, we were able to identify this as a market maker buy model, seeking the for value gap up here. And, you know, this is where we've ended up, right? So given the fact that we've ended up where we're at, I don't think we are entirely done. Let me see if it'll let me switch. Yeah. All right. I don't know why it's freezing, so it doesn't want to let me use both of them. Not too sure why it's doing that, but I guess we'll just have to work with it. But yeah, so since we're up here already, it seems like there's a chance for us to open up, excuse me, for us to open up and then decline into here. I would prefer, like on the bonds and yields, how they have that huge wick. Okay, I would really like to see them. I would like to see the currencies do a very similar thing. Not want to dig too deep inside this large wick that overlaps these areas. I mean, it could, but again, if this is going to complete this as a market maker buy model, we already seen this as a second stage distribution to punch price through the buy side up here, because it obviously, I mean, you could just observe this and see if you study market maker buy and sell models. Yeah, I mean, you could visually see this just popping off of the chart at you, like very beautifully. So if that's going to continue and we are going to blow this high out, which could very well be the case, then obviously, again, we don't want to see any strong retracements. That's not what that pattern promotes when it's in full swing, like it seems like it is here, like it has shown us from the last couple of weeks. So with that being said, we should be able to see a small retracement, maybe to come back in here, but it's a maybe, right? It may see a retracement. Okay. Again, this wick here, overlapping these areas, should be able to deliver us as a potential balanced price range. Again, it's not overly surprising if it does come down into this level. It's a little suspect, but again, that doesn't change anything. It would just mean that they're wanting to dig it lower a little bit, I guess. But I don't see that happening. Okay, I see them, especially because we got this overlapped inversion fair value gap as well. Mind you, this is a balanced price range. When we were trading over here, talking about price over here, this ended up being a balanced price range. Price never came back into it. So what's happened here? Right? We've been able to really rampage through a previously used balanced price range. And we've now been able to also anticipate this is a market maker buy model. So because we've really ramped through that, we're now going to reuse this as a inverted specific balanced price range. You can think of it in more simple terms, right? This is an inverted fair value gap, right? We also have this large wick here, Okay, we have these levels here, but we're in a second stage distribution of a market maker buy model. All those things being considered, those are all reasons why we should not have to dig too deep into this wick, and it should be able to, fairly easily slide up through the highs up here. We'll see what happens. Obviously, we're in very chaotic times, so maybe it wants to do something like this before it does that and gets up there. I don't believe it'll do that. I think we have enough volatility in the market to get us up there in a reasonable capacity. So we'll see how price wants to behave. We can mark off this wick. We can observe this as a volume imbalance or whatever, right? It's kind of where price reached up into, kind of failed to get up into that specific area. But again, I don't think that's going to act as too strong of a resistance point. But I would definitely like to see price open up on this next candle that's coming in a couple hours. Going into tomorrow, going into Tuesday, I would like to see us retrace a bit, maybe revisit this, provide evidence that it doesn't want to go lower by giving a wick, very, very hesitant delivery to get down below that, and then give us displacement back to the buy side. And if we do see that, then I'm very confident that next week could end up giving us enough energy to get up into here, or enough interest to get up above the buy side. But that is my opinion on this asset class. Very similar thing, obviously, for the euro as well. Let's kind of zoom out a little bit. Euro has been a little bit more excited than the than GBP, obviously. But again, it doesn't change really anything, right? We kind of also can see from this monthly time frame, we got actually a really, really large relative equal high point up here. So that just further solidifies my interest to want to see this get up into that level. And then, of course, whatever happens when it gets up into there, we'll make a decision on. I can tell you one thing, that if we blow that out, we're probably due for a pretty strong retracement. So, because that'd be triggering in a lot of liquidity up there, and they would most likely want to pull back on people, whoever has like buy limits up here. Some people like to trade in a way that's like above equal highs or above any type of high. They put a buy limit, meaning that if it gets triggered in, they're putting themselves into a buy automatically. And that's the stupidest thing I've ever seen, because it doesn't work out for the most part. Certain times it can, if you have certain things in alignment. I'm not going to get into that right now, but yeah, for the most part, that just looks very beautiful for us to trade buys up into that. But again, if it gets up there, when it gets up there, because I think it will, we'll be able to make opinions around what we think is going to happen when the time comes. But yeah, that's my target. Okay, that's my overall long-term target. Well, somewhat semi-long-term, intermediate term, I should say, for like the next week or two. So we'll see how that works out. Market has a monthly high. All right, so yeah. And again, very, very similar to... we just looked at that actually. So yeah, again, dropping down to the daily chart, we could see the wick, right? It's a little more details. We kind of already revisited this area. Again, this is Friday's high, Friday's low, okay? So we created this as a balanced price range. You could see the delivery, how it's not wanting already to go down there. It's already starting to deliver. And again, we have the relative equal highs up here that are absolutely gorgeous. Looks very, very nice. So we'll see what the behavior is going to be. I think we are just going to continue to really, really get excited and break above these highs. Clearly, it's in a hurry to get somewhere. You could just make that assumption based on what we see in price. And what could it be in a hurry for? Well, what we just looked at is very convincing. So we'll see if it wants to get up there. But that's what I'm going to favor. And then if once we get up there, we'll see what assumptions we can have. But yeah, so that's my opinion for GBP. And then let's kind of see if there's any type of differences we could find in here. So we got the euro that blew this out fairly strongly. And it did kind of set equal highs up here too. It did kind of pierce it a little bit, but that's very, very light. I really don't think that's going to have anything too impactful. in terms of sending price down to a retracement. I mean, I could see them wanting to do some retracement, maybe down to this fair value gap, blow out this previous week's low. Then maybe that'll give them interest to want to go higher. That's obviously a beginning of the week type of characteristic. I would be okay with seeing. Doesn't upset anything in terms of us wanting to favor buy side. Then of course we have this swing low here. So yeah, we're just gonna have to see what happens. The start of the week, again, if we go into this thinking buy, which most people are probably going to go do this week, price may want to give a retracement, right? It may want to spend some time down here, sweep these people up, then go, right? Especially if it wants to give a very strong move. Running the stops here, it wouldn't be unreasonable and it wouldn't upset anything. Again, the only way that I'm going to turn bearish on the higher time frame on this asset is if this low down here is violated. Okay, some people may think, oh, that's a little bit long to make that decision. But guess what? I don't pick tops, I don't pick bottoms, and I don't get fooled for the most part. Okay, sometimes I do, but it's very rare. And I've proven that, so I can say that. And the reason being is because I demand evidence. And if I don't have evidence, I'll either sit back or I'll just wait for something to really confirm whatever it is that I'm trying to do, or prove me wrong, right? You should go into the markets having the markets prove you wrong. Demand your entry, demand your model, okay? And then also demand from yourself discipline to follow the rules that keep you safe so you don't get played in the marketplace, okay? And Sufi, no. Okay, no. No. Okay. No buy. Okay, I'll tell you when it's a good time to buy. Okay, private community will definitely know. YouTube most likely will know too. It's not going to get past us in any capacity, so it is what it is. But don't go into in a couple hours pushing buy, please. Please don't. Please don't. Please don't. Okay. If you want to gamble, actually, I'm not even going to say that. Don't gamble at all, bro. Gambling is unacceptable. Okay? It is what it is. But yeah, so, yeah, see, my dog's even telling y'all, no gambling. See, he over here yelling too. He's not playing these games. But yeah, so I hope it's clear as far as our opinions and what we want to see. Again, there's a chance for this to seek this sell side down here. Euro has definitely been more excited than GBP. GBP does have a little ways to go, so we'll see if it wants to get up there. Again, I would really like to see us blow the highs out because of the equal highs, do a very similar thing to what the Euro's doing. So again, we'll see what happens. There may be some type of retracement. If there is, we may see an SMT form at this low, because this here, if you zoom in here, it made a lower low. So the next candle, if it forms a higher low, that's going to be very interesting. If we fail to blow this low out, if we fail to blow this low out throughout the week, and then we see the Euro maybe sweep the low, that may present us with an SMT. Okay, and then that could also, if we see a displacement away from that, attacking the buy side, that'll probably be very interesting, giving us, flashing signals that, buys will probably kick back in order. Again, I don't trade currencies. If you do, I'm not hating on it. They've been pretty amazing, and, we've been doing fairly well calling all the markets together. So multiple things have been doing exactly what we want them to do at multiple different times, supporting each other, So, it's not just one asset that we're calling to go to specific levels. It's multiple asset classes, different classes of assets, moving to very, very precise targets. And of course, we use a lot of that to support the indices. But again, if you trade other assets, the analysis we do on Sundays and just overall in general benefits you no matter what you trade, So yeah, it's helpful for anybody and everything, for dog trades, okay, whoever, it'll benefit them as well. Right. But yeah, so do you guys have any questions about the currencies? If not, we will march on forward because the DXY is definitely going to be interesting. So let me know in the chat if everything's made sense so far. No. We got this little no. I swear to God. Actually, I probably shouldn't say that. But hey, no. Stop the nonsense, yo. Tony and Sophie, you gotta relax. I do not condone, yo, in any way, shape, or form. Please don't. I better not see you post something where you got like 20 freaking lots on, and no, it's not happening. Please don't. Please don't. It's bad habits, yo. Bad habits. You got to practice how you want to play. Like, you can't, no. But yes, so I wouldn't be surprised. Absolutely not. I know that gambling could get you something, but I don't know, bro. I mean, you do what you want to do, bro, but if it's my advice, don't do it. Seems fun, but I'm watching you, bro. I'm watching you. So we'll see, bro. We'll see. Yeah, that's what I thought. Yep, exactly. Hey, Fritz got some good advice right there. The house will always win, yo. The house will always win if we just toss it in. This is war, right? We gotta remember this is war, so we don't want to get headshotted. You know what I mean? Nah, Fritz is doing the right thing, yo. He's doing the right thing. Good influences over here, all right? All right, but yeah, we'll move on to the DXY real quick. So I've been talking with my private community about this bearish breaker. We actually called this entire market maker sell model. Most of you guys that are here have seen me knock this market maker sell model framework down and explain it the entire way. I mean, we've been calling for so long, especially in the indices. We picked it right at the top. If you go back to when this time was and you go listen to some of my YouTube lives, or especially you guys in the private community, if you go back and look, we called it beautifully. And when it delivered and broke structure to the downside, we have been pushing shorts the whole time, right? And then any buys have been to set up further shorts. There's been moments where price kind of stalls out, but you know, it is what it is. It doesn't change anything unless something changes. Very, very important. And again, it's going to test your patience. You know, if we're stuck in a consolidation, price isn't moving, but you are confident that it's going to still drop, it's going to test your patience. It's going to punch higher, and it's going to slowly grind your interest to want to short. And then all of a sudden, out of nowhere, for FOMC, CPI, you know, whatever the case may be, it'll give you the signal that you have been anticipating. But if your patience isn't there and you're starting to convince yourself about the other side because price is taking forever, I mean, the market's going to win. You know, you got to go into this battle understanding the characteristics of the enemy. And a lot of times it's going to test your patience. Remember, there's large pockets in the markets. They're able to stick around in a losing position longer than we're able to tolerate anything. You know, it's in part why I don't swing trade. You know, I could, clearly. I mean, I prove that I can do, you know, many styles of trading if I chose to. I just want to get in and out, right? I'm cool with the minimums. I want to get in and get what I set my goals for and get out. I have no interest in being the best. I have no interest in ego and trying to, hey, you know, like show off like, hey, look at my 500 point move. You know, I really care less, you know. The flex is being able to go in and actually knocking down very accurate, lethal ideas, and then taking, you know, what I set my goals to, getting out of the market and being content while everybody else is in there chasing, being greedy, because that sustains longevity. You know, of course, I can hit home runs, and I have. Like when I go to the indices, I'll show you guys one of the other ones that I showed on Instagram, where I smacked a whole like 200 point run. Okay, took down my 100, and it was solid. You know, again, I'm not one to sit and showboat, and showcase a lot of the monetary values of things, because it doesn't help you. You can't spend my money. And, especially if someone's new, it kind of affects their mindset, because maybe they can only make $50. Maybe they can only make $20. And if they see someone out here just shoving 300, 400, 5,000, whatever down your throat, it starts to really eat at your confidence. And then you start thinking like, oh, I'm not doing enough. When that $20, $50 eventually is going to be a larger amount. But where you're at currently may not be, permitting that yet. It will, but that's why your sphere of influence has to be very, very controlled. You can't be watching 500 different streamers that are at all these different levels. They've been trading for 5 years and 2 years and 10 years and 30 years. And then, you get very mixed signals, and you don't know exactly where your mindset should be catered to, so you just get yanked all over. And especially if they're doing different things and they're not really like solidified in one way of doing things. Like, I'm an ICT purist. I don't have any other style that I use. The only things I use is from one source. Okay. And then of course I have 2 other sources that are the same way, but they just have their own style within ICT concepts, which, they were gracious enough to help me build my own, so, and then where we're at because of that, so, and obviously I hope that I can help you guys find that in yourselves as well. And you can also build something. Hey, can y'all hear me okay? I think my mic just cut out for a minute. Now it's good? Okay. Okay, cool. Yeah, it was so weird. I just just went in and out. Yeah, what a weird thing. But yeah, before everything blows up, because it seems like things are going crazy today. Mic volume and weird alerts. All right, for sure, but y'all can hear me still. Okay. Quality over everything. Yeah, exactly, Tony. Exactly. But yeah, so, with this overall DXY delivery, market maker sell model has been completed. All these levels, if you guys have been with me for a while, we've talked about this in great detail. I don't think I got to get too deep into what has happened previously. If you guys are new and you're watching this replay, definitely go back to some of my older videos and watch how we have walked this entire move down to the sell side. Look and listen to what we've said. Listen to all the things I pointed out. Because everything has came to fruition exactly how we wanted it to play out. No help from anybody else, just us being here, digging into the things that are taught on this channel. And of course, can't take any credit away from ICT himself. And, because these are his concepts, you know what I mean? We just build our own systems within the tools that he provides. So although it is ours, because we are personally different than everybody else, and we have the ability to create our own thing, I don't think it is. I don't think people have integrity that try to rip things off and say, "Oh, this is I found this and I did this." No. Okay, have integrity. ICT gives us the ability to say, "This is my system." So, what more can people want? Why does it have to be at a level where people try to claim that they created something or they found it, on their own? Just it makes no sense to me. But ego is the devil. Okay, pride is the devil. Okay, and unfortunately, people get overtaken by that, sadly. But yeah, so again, we've seen the delivery through the sell side down here. So let's actually start from the monthly. Let me take some of this off real quick. So we got this fair value gap down here. If we are going to continue to fall, that is what I'm going to aim for. But if we fail to do that, say it starts to rampage higher, right? Because we swept sell side here. It could very well do that. I need evidence that it's going to do that. Part of the evidence, could be the fact that we swept this very large liquidity pool. But again, we have this very obvious liquidity target down here. It's taken buy side, ran through sell side, and we got this down candle that should act as a bearish breaker. Okay, and if we drop down to the weekly, pull up some of these annotations. I've actually been talking about this for the last week or so. And, I've said the daily volume imbalance in here was something I wanted to see price reach into. It didn't happen. What did happen, though, is price delivered into the breaker a little bit, this monthly bearish breaker, and it's pretty much delivered away. Okay, so until price was to prove that it wants to really get up there, I'm going to continue to favor this quarterly fair value gap that I mentioned here. We saw that on the monthly chart, but if we go to the 3-month chart, you can also see how that fair value gap on that monthly is also a quarterly fair value gap as well. The current quarter has been extremely bearish, obviously as a result of all the stuff that's been taking place, which I have no problem with, right? Let it keep happening. Keep giving us volatility, 1,000-point ranges. It's absolutely amazing, to be honest. Difficult at times to read, but in terms of finding entries, you get around the right people, it's not really too chaotic or unrealistic to be able to find stuff in any condition, which I hope those of you that get a lot of time with me and have access to a lot of time with me have started to see that. It's just the process. You master the process, you have unlimited potential. And that's the whole purpose as far as why I'm public, why I even have a community in the first place, is to help you guys get there. But yeah, so again, we got below this fair value gap here, so we're going to watch that as well. Again, we have this bearish breaker, these consecutive down candles. Price seems to want to be respecting that and continue. So again, unless price gives a displacement through the buy side, I'm going to take this as an indication that, price is probably not going to really even want to get up into here. Okay, if it does, that's great. That doesn't turn off my interest to see DXY go lower. Again, we're going to need multiple PD arrays to get violated, that being the breaker here. I want to see the volume imbalance on the daily violated and this weekly fair value gap violated. And that may trigger in price to want to dig a little bit deeper into here. But in all honesty, when it comes to long-term adjustments in narrative, for this to turn from super bearish to running higher bullish, it's going to have to break this high here. Okay, because in reality, when we look at things like this, if we look at the weekly chart, like I was just on real quick, if we take some of this stuff off, look at the 3 PD arrays. Okay, we have this large wick, we have this fair value gap, we do have this inversion fair value gap. It's kind of overlapping with this bearish breaker. So again, price needs to really get up above those levels pretty aggressively in order for us to turn off our interest to want to short, because I guarantee you that if this was the 5-minute chart, if you put yourself in that type of mindset, if this was the 5-minute chart, would a retracement into this level make you think the price is going to go higher? You would think, no, it looks like it's just retracing, So why is it different if we look at the daily chart or the weekly chart, right? Or vice versa, right? Why is any principle that we use on the lower time frame or how we see the lower time frame different if we move up to the higher time frame? Because the only difference is how long something takes. Okay, there's no need to think, oh, it set a bottom, so it's going to go higher long term. We may very well see a retracement because it took out these lows here, very significant lows. All right, but where's it going to go? It'd pretty much just kick into the mode of delivery where sell side was taken, external range liquidity was taken. So what happens? At like a minimum level, price could want to retrace back up into this fair value gap. That fair value gap is in alignment with the bearish breaker. And unless that is violated and overlapped aggressively, we have no need to, adjust our thinking from bearish to bullish. Bullishness in this case, because this is the higher time frame, you only want to focus on bullishness being a way to set up more shorts. Unless, of course, say a big candle here forms just like this and overlaps this. Because if that's the case, again, we may be starting to see something change, right? This may create a balanced price range in that case. Okay, so if this doesn't hold and we get above that, but we have an overlapping bullish candle that forms over here, that is something that'll trigger us into thinking, okay, maybe something is changing. maybe, that's a key word, maybe something's changing, okay? The only time I'm certain that the overall downtrend is completely done long-term wise is if we really start getting up into these levels here, all right? Otherwise, again, just like how we saw here, price has rejected all the way up here. Does this in any way tell us that we're going to go higher? Has 3 PD arrays been violated very aggressively? Has any structure changed? Right? Does it look like anything has changed structurally if we're looking at it? Think about this being the 5-minute chart. If price did this, is there even a shift in market structure for price to even be considered to go the other way? No. So why would we start to think like, oh, okay, well, this must be the bottom? Why would we think that? Just because it's the daily chart or the weekly chart doesn't mean that the principles you operate within on the lower time frame changes. It doesn't mean that anything changes. It's all the same. The only difference is it takes time. It takes more time. You know what I mean? So yeah, these things that I'm mentioning right here are vitally important. They're not the super sexy fun things to talk about, but this is an understanding of how to read the story price is giving you, okay? How to trust your narrative, why sticking to a narrative on the higher time frame is so important, because this is where people get fooled and they become flip-flopping addicts, okay? And they want to buy and sell, not knowing what the hell is going on. And then they get lost and it's just a disaster. Exactly, Fritz, exactly. Bias versus narrative, it's different, and the time you spend with me here makes that very obvious. Although nobody else teaches it that way, it's kind of special to us. It's something that helped me understand. So I hope that it makes sense to you guys and it's helping you understand as well. And I hope what we've talked about today so far is really driving home that difference, and really showing you different ways of thinking that help you trust the higher time frame, let you live in a place of calm in your mind when it comes to identifying narrative, and keeps you calm when things are looking a bit stormy in the marketplace. You know what I mean? Because at this moment they kind of are, and lots of people are panicking, as you well know. You just read a headline and you probably think the world's going to end. It's pretty incredible, to be so honest. But yeah. So yes, let me look at the comments real quick. Fritz, I'm glad it's helped you. Sufi, I'm glad you think so, bro. All right, Tony said no, for sure. Okay. All right, so I hope in a nutshell that kind of gives us a very simplistic way of viewing what we think is going to take place, what would change our mindset from bearish to bullish overall, and then how we're going to trust these levels in here to hold in price, and know that if price does rally up and attack some of these levels, it doesn't change anything. It's just going to be a bullish run to set up further shorts unless this level gets closed above with a candle like this, right? If that takes place, again, we start to potentially get our mind thinking that, okay, maybe something's going to change here, right? And it may take a couple weeks for us to solidify that change. And that's fine. It's part of the process of reading higher time frame charts. But long-term wise, it keeps you in alignment. It keeps you grounded in what the market's actually doing. And it makes it so you're confident when you go into the market. You're not stressing out, right? You're not losing your mind, okay? It's a very repetitive process, really repetitive way of thinking that just, again, keeps you calm and trusting in a particular narrative. And, the separation between narrative and bias helps you understand, okay, well, if bias is bullish, but the narrative is bearish, what is price reaching for, right? If the bias turns bullish for like a day or two, what's it reaching for? Well, we took external liquidity. There's a bearish breaker here we could dig into a bit more for bias being bullish in a bearish narrative. Or it could maybe want to dig a little deeper and get up into the daily volume imbalance, mid portion of this weekly fair value gap. But as long as price continues to stay below, we have a layered event going on here. Bearish breaker, downtrend, fair value gap, overlapping different daily PD arrays as well to use as liquidity to pair further shorts. And we have our invalidation level, right? If price gets up above here, we start to think, okay, price may want to turn around and go higher. And then you could think about things in that perspective when that type of stuff takes place. It hasn't taken place. That's a contingency plan for us to want to think buys, okay? Long term, okay? Going into this week, we're going to think bearishness. And I would love nothing more than to see price run against everybody that's trying to short so we could get up into here, position further sells, and use them as liquidity, and then position ourselves back in line with a short, possibly getting us down to this quarterly fair value gap that looks pretty tasty if you ask me. All right, and we got lows that have been left here too, so that's possible trend line liquidity in the making. Very clear sell side liquidity pools. This is a previous week's low, so that's full liquidity, and of course that's ahead of the quarterly fair value gap as well. Okay, so yeah, I hope that makes sense for the DXY. We've talked about bonds, yields, DXY so far, and now we will move on to the indices. Signal for Sufi, you are wild, bro. All right, so if we look at price here, clearly price is, I mean, it's massively wild. Let me actually pull up a different chart. Let me actually pull it up from down here. Got it somewhere over here. All right, let me pull that up real quick. All right, so those of you that have been with me for a while, right? Like I've been saying, even those of you that have just been paying attention to what I've been saying, we hit this yearly order block, and that's triggered in this run higher, this retracement. Very interesting how the yearly order block gets tapped into, and Trump announces tariffs, and we get a huge run higher. Or he didn't announce the tariffs. He announced a pause on the tariffs, and price hit a yearly order block and then rallied aggressively as a result of that. Very interesting phenomenon. Is everything controlled? Right? Like, does he have something to do with it? Right? Like, what conspiracy's going on right now, yo? Like, it's pretty weird, pretty interesting how that took place, right? But yeah, so we see that pretty strong delivery, and now we're pretty much up here. If we go from this low to that high, we'll see, right? We came from a discount, given this range on this month, this quarterly chart, back up above the discount or equilibrium point within this quarterly range that we're able to identify here. So yeah, we're going to continue to monitor what that's going to do. It may have pulled it up to a premium just to get smart money back up into a premium. Again, we don't know if it's going to be continuously bearish overall, more long term, because a lot of the things that are coming into the U.S. economy are extremely positive for the U.S. economy. They're somewhat negative for companies because they have to adjust their supply chains, and things may get a little bit more expensive, and this or that. So there's a lot of variables taking place, but this is obviously a very interesting observation. Something important to also monitor, take some of this off, we have this quarterly high and quarterly low. Notice how the last 1, 2, 3, 4, almost 5 previous quarters liquidity on the sell side has been all purged in 2 candles. Pretty interesting, if you ask me. I mean, this is where millionaires get made in the stock market. For long-term investors, this is where compound interest really compounds, because everybody was thinking short. Let's sell everything. Let's get out of the market. The whole world's going to end. It's going to zero. And everybody sold, but billionaires and rich people pretty much looked at that as like, okay, you, my friend, are going to take the opposing side to my trade. let me get in. Okay. I mean, there's rich streamers like Dave Portnoy who made millions off of the drop because he knows how the game goes. You know what I mean? Like, this is the game we're playing, you know. You have to be understanding of how these entities operate and how the stuff's controlled and not be fearful, because what's the point being fearful? You know, there's no point unless you're spending rent money. You know, if that's the case, you're doing it all wrong. But, you know, that's another conversation for another day, right? But yeah, so yeah, looking at this quarterly chart, we just came all the way back from this low to that high. We're back at a premium. So, you know, if we do want to short some more, which could very well be the case, we did leave relative equal lows. It did hit that yearly order block. Again, we're going to see what price is going to want to do as a result of that. Just like I showed that quarterly high and low, we also have this monthly high and low. So you want to mark that off because that's the current important range that we're trading within in terms of liquidity identification. Drop down to the weekly. We have the previous week's high, and we also have the previous week's high, and we also have the lows here as well, and the lows here as well. Okay, and then we have this volume imbalance. So that's interesting, right? We'll see if maybe price wants to try one more time to get up in there. We do have this large wick, so that is going to play, in my opinion, a large role in us assuming whether we're going to continue to go lower or if price is going to want to go higher. This down candle here, this large wick overlapping this gap, and then price returning back into that, pretty much, in my opinion, should deliver this as a balanced area in price. Okay, I do feel that if we're going to go lower, it's probably not going to want to revisit that. I mean, I wouldn't be against it opening up, rallying up, stopping these people out one more time, hitting this as another brick wall, and then just continuing to try to dive lower. We do, if you look at this time frame, I think I have it outlined. We do have this fair value gap available. So it's definitely something I got on my radar. But yeah, this was a pretty beautiful run here. Let me tell you this. If this drops further, I'm assuming that, you know, given what we see here, and then, of course, when we go to the daily chart, what we see there as well, just overall sentiment's bearish. But if we do drop off this yearly order block, sending price higher, this is an absolutely amazing, crystal clear example of why what I've been talking about in terms of counter trend trading and using opposing PD arrays to set up opposing moves for like retracements is so important. It's so powerful, right? Because it hit this opposing bullish PD array on the yearly time frame, and that triggered in a massive retracement, right? It was a tradable retracement to go higher, reaching up for, you know, volume imbalance, large wick midpoint, you know, so on and so forth. So if it delivers away from here and targets this low again, I mean, the narrative tactics we use to continue to push for one side of the market and not flip-flop, it's obviously showing effectiveness for the last like weeks on end, months at this point. And then that opposing PD array identification to structure in counter trend ideas, I mean, that's on full display here, especially if we do see the market continue to want to seek sell side and just kind of, you know, really ram through this once more, which I'm assuming it will until we get proven otherwise, right? So yeah, Sufi, that's a good way to look at it too. Possible optimal trade entry, you know, get us up to a premium. Premium what? Premium PD array. Okay. Why is the optimal trade entry? Here's another layer for people that don't know. For optimal trade entry, why is the 62% retracement level so important? Well, and why did ICT teach it? What did most people miss about optimal trade entry early on, and probably still to this very day? Well, when price runs up to a premium after it like sells off like it has, what's it reaching for? Just a premium price level? Don't we have premium PD arrays, right? Don't we have like specific areas in price that price will reach up to deliver away from? So optimal trade entry mixed with a PD array at a premium, I mean, it becomes a supercharged monster now, doesn't it? and becomes a lot more clear rather than just seeing an optimal trade entry go to, you know, a specific fib level, right? Just think about it. ICT's older videos, he left this element out. So those that didn't study enough thought it was just a fib level. That's why you see some educators and haters say, oh, well, it's just some fib level. No, genius. You're missing a huge portion of it intentionally. You know what I mean? So it's fascinating. And again, there's different levels that can take place between all the different models that take place. And we could dive into rabbit holes for pretty much 7 or 8 of them, right? Like, I only trade 4, right? But I know majority of them. 7 specifically, I can operate within, but 4 I favor, right? It's market maker models, the YouTube model, breakers first and foremost, and then obviously institutional order flow entry drill, and then all continuation variations within each of those models. That's where I live. That's my home. That's where I like to stay. But of course, optimal trade entry was drowned in my head, okay, from the start, because that was like one of the first things I was exposed to. Breakers were the first one that really made sense, but and of course market maker buy and sell models, so on and so forth. But yeah, so again, this is what we're going to assume the price is going to do, right? It's just retracing up. I wouldn't be surprised if we open up this next week, maybe look to wick. I'd prefer it not to. If we do stay below these levels and refuse to even attempt to get back up to these highs, or back up into this volume imbalance, or even try to contest this wick again, I'm going to assume this is a balanced price range. Again, if we start violating these levels, though, and start rampaging higher, my line in the sand, my invalidation for short positions, as mentioned last week, is this high here. I think it was, I can't remember if I mentioned that high on YouTube, but my private community students have heard it nonstop for the last like week or so. It's being in this consolidation, we navigated that whole thing. I think I had a chance to navigate it a bit on Tuesday last week with you guys here on YouTube. But yeah, this is the invalidation point for the week for short positions, for short interest in general. Okay. Yeah, there we go. So yeah. So yeah, guys, let me check the chat. Hey, what's up, 95.5? Yeah, does everything make sense, you guys? I'm assuming that you just got here, huh? Hope you're having a good Easter, brother. Yeah, perfect sense. Beautiful, beautiful, beautiful. All right. Well, aside from that, I guess we could say that that is pretty much all we need to observe and keep tabs on. Don't forget to add this. We have a new week opening gap about to be created, be created. So keep that in mind. So we'll keep that highlighted. But yeah, outside of the analysis, or even, related to the analysis, do you guys have any specific questions? I mean, it could be questions from what we talked about today. It could be process questions. It can be anything. It could be stuff that you have questions about in 2016 mentorship. It could be 2022 model questions. It can be whatever type of question that's related to trading that you may have. I'll probably spend the next 20 minutes talking about any questions you guys have. Can you please show correlation between S&P and NASDAQ for the coming week? Yes, no worries. All right, so let's actually go to this chart. S&P and NASDAQ for the coming week. So I do see that there's an SMT with a gap here. That's kind of interesting. Interesting observation. This one too. So that's telling me that the NASDAQ is not the weakness holder, showing me that this is potentially going to be the weakness holder. The S&P and the Dow. I mean, the Dow is kind of clearly showing that. But the Dow is more volatile because there's only 30 stocks in it versus 100 in the NASDAQ and 500 in the S&P. Yeah, all three of them are exactly the same. That is a beautiful thing to see when they're starting to finally be like lockstep with each other, because that means that things may start to clear up. It may not have such a sloppy correlation. You know, the market speaks, you know what I mean? And you have to learn the language. That's what the 2016 content is, at least for us as ICT traders. ICT has explicitly said that content doesn't necessarily just hand you a model. It hands you the elements to create a model. It hands you the elements to understand the language when you're looking to dissect what the market's trying to tell you, to build your baseline understanding of your anticipatory skills, the process related to building that. But that's why many people got exposed to the content through free means of some kind. But most people still failed using it because it's just the language. It was made that way. And then, of course, he created a lot of amplification. He has like over 2,000 videos of amplifications that most people, well, I'd like to say majority of people don't have access to. You know what I mean? Most people have no access to the amplified versions, right? The extra commentaries that he did related to the main topics. Which obviously, even if people did have them, you'd have to piece together what fits where. This video was on January this time, and he talked about this market when this was happening. Like it'd be impossible to even pair it together unless you had it organized there. So that's why it was so difficult. That's why there's a lane for people to come in and do what I'm doing, and do what a lot of the really good, effective ICT traders are promoting. That's why there's a lane for that, because the mentorship was using the concepts live, not getting the videos. That's just the language, but you have to learn how to speak the language. But you first you have to understand the language, but then you have to have someone that you could practice speaking the language with, right? When it comes to like an actual language. But with trading, you want to learn the language, see it done properly, then you can really get to understand it. That's why there's a gap between so many people that learn ICT concepts. And it's a little bit less now because ICTs came out and done that live, right? Doing what he did for, I think 6 or 7 years with his private community. But that's why this is helpful. That's why I wanted to do this, because I know the dynamics, because ICT's been very open about it. He's like, there's a reason why he allowed his stuff to be leaked, and he didn't put it in a locked up way of doing things, like in a place where, you can't just download it. He knew that it was going to spread like wildfire because, everyone's going to try to pretend and do all this nonsense. It was free marketing. That was his whole plan the whole time. He knew it was going to be exposed, but then people started leaking some of his other content. So he started getting real, like his commentaries I'm talking about, which is the real mentorship. Which again, he's done that for the last 3 years publicly. So, you're not really missing much from all that other stuff. But yeah, he ended up locking it up. He had like watermarks. He started putting people in different groups, right? So it'd be a random number, right? Like it'd have a watermark of like GQSFWY group, right? And you have like 50 to 100 of them because he had hundreds of thousands of students. And then anytime it was leaked, he'd be able to see the video that was leaked. It'd have the watermark, so then he could weed out whoever was leaking the specific commentaries. You know what I mean? So yeah, he started clamping down when he saw that certain things were getting leaked that he didn't want to have leaked. Then that's also, the loser leakers are the reason he stopped. But again, it's kind of also beneficial to people publicly, because, you know, he ended up coming out and doing it publicly. So at the end of the day, the real students won. Unfortunately, the people with no integrity also won. They're kind of dried up now, but, you know, I guess that's the risk you have to take if you have something of value and you want to share it with the world. There's going to be losers trying to smear your name, and it's unfortunate. Yeah, his PDS, yeah. I've seen the same thing in all three of them. Yeah. I wonder if that could be SMT. For SMT, NASDAQ. I remember years ago when they first started coming out. Yeah. Yeah, he everything's calculated with him. You know what I mean? Like, everything that he does, everything he says, everything that he posts on Twitter or X, whatever you want to call it, everything that he does is very calculated. Even like his persona, you know, he's also kind of mentioned recently about the persona ICT that he created a character around, like these very outlandish ways of being. Like, he's also came out recently saying that, you know, a lot of the stuff that's said in terms of like his personality and different things, like the super flamboyant stuff, he said it was all for show. So people would go out and start making fun of him for having a mental disorder, all these different things. I mean, if you think about it, if you want to get free marketing and come out here and do what he's doing, what he's done, but really have the skill set and just like manipulate social media to the max without spending $1, I mean, it's a genius strategic way of getting some serious eyeballs, and he's done just that. You know, 3 years ago he had 101,000 subscribers, and he first started showing his subscriber count after years, like 6-7 years of having it off, so nobody knew how many people were following him, but his private group was so huge. And then all of a sudden he shows it like 3 or 4 years ago, and then all of a sudden you look now, he's almost to 2 million subscribers. I mean, that's a crazy amount of growth with not $1 spent on marketing in over a decade. I mean, since the beginning, he's never spent $1. I mean, it's incredible just off of, and he always promoted in a demo account, but his students come out and they prove it. So, I mean, that's a huge shining billboard as well. Like, hey, this stuff works. Like, not only he's doing it, but you're going to call all these hundreds of thousands of other people that are killing it fake too? Like, you going to really deny it? I mean, it's undeniable at this point, you know? So, and the people that actually want to learn, that aren't here for drama, you know, I mean, they see it, you know? And then when you're watching people that are actually like his students that have put in the work, that actually know what they're doing, I mean, it shows too. You know, you can also hop on people's stuff and see that they don't know what the hell they're talking about. You know, like it's you'll start to see if you're around the real stuff, and then you go to someone that's not truly actually doing things right, or honestly, I mean, it's very, very obvious, you know. And I mean, you just sit there and watch a couple live streams, see if they call the market correctly, and most of the time they're going to get it wrong. But obviously the ones that know what they're doing have explanations for why it's going to go right. Most of the time it'll go right. And that's the thing, you don't have to be right 100% of the time. I'm not right 100%. I have shown that we're up in the high 80s. Okay, I got the tracker to show it as well. And then of course I'm live, both on YouTube and private community, so on and so forth. So it's kind of hard to try to get around that if I wanted to fake anything, you know. Same with Jade Cap, same with, you know, all these other traders that I got massive respect for. I got someone that I want you guys to also go follow. It's one of my friends from France. He's actually the same class as me with ICT in terms of charter student vibes. He let me pull up his Twitter real quick, actually. It's one of my really good friends, and he has a ton of value. He's always amazing. So yeah, I want you guys to go follow him if you don't mind. His name's, His name is Blanco Oliver. Go follow him. He is absolutely amazing. Absolutely amazing individual. Mind you, I don't talk about a lot of people. I don't trust a lot of people because it's just not safe to do so. But yeah, this is one of my charter brothers. Same enrollment, same everything. Amazing individual. So yeah, definitely go follow him. Tell him I sent you. But yeah, he's from France. He is. I'm gonna definitely get him to come and talk in private community here in the near future. I got a couple people that I want to have come and chime in the private community. But yeah, again, you want to keep your sphere of influence very tight. But there's some people that are just amazing, truly, and you don't want to discount it. Honestly, I don't know if he has an Instagram. Actually, I'm not 100% sure. Oh, another guy you guys want to go follow is CJ Trades. He's amazing too. He's amazing. Really, really good people. There's some really amazing people out here. You know what I mean? Oh, and Sufi, that's on X. It's not on Instagram. See, I guess he doesn't have a. Instagram. I don't think so. I haven't never checked. He's only on X. But yeah, CJ Trades, Blanco. My other actual mentor, aside from ICT, is Joe Miller. He's amazing. ICT flashcards, that's his Telegram. He's amazing, absolutely amazing. He's the reason I focus on the higher time frame and have the perspective I have when it comes to identifying higher time frame importance and how to navigate it and all that. I mean, you got to pay a crazy amount for his mentorship, but I mean, man, the people that I've invested in to better myself as a trader, it has been worth every penny. I would have paid 10 times more than I've paid to get what I've been able to get. So, you know, and you guys are kind of benefited by it. You know, I spent thousands on my education and my private community, just to, make sure I don't bring a lot of bots and people that don't actually care about trading. Of course, there's small little paywall ahead of it, but it has to be what it is, because first of all, I got to protect the integrity of the students that come to me, and I don't want them getting pestered and annoyed. I want the whole community, every student, to be an asset, and it's been created by them. The way it's organized, the lessons based on their questions, their difficulties, the live streams that we continuously do, and even the YouTube. You know what I mean? Whatever you guys want me to talk about, make videos about, I can also cater to some of the stuff that you guys have issues with. You know what I mean? I'd be more than happy to do that as well. Because you guys are still part of the family too, whole YouTube channel. So yeah. Yeah, so again, back to the chart, everything looks pretty smooth. You know what I mean? Everything looks like it's still favoring what it needs to be, or what it needs to do, I should say. So continuing the downside. Invalidation for all indices it's going to be this high up here, this one right here. Why? Because there's a swing high, there's a gap here that's holding price, and then the swing high. And then, of course, you could add in the fair value gap. You can add in the new week opening gap, so on and so forth. And, of course, if it just rampages through, what is supporting the other direction? Nothing in that case, right? It's just going to continue to rebound and go higher. All right, bro. Can you check gold? Yeah, we could check gold. Why not? See what gold's doing. Yeah, absolutely amazing. When the world's in chaos, expect gold to rampage higher. I mean, the dollar should be backed, if you were asking me, for my opinion, the dollar should be backed by gold like it used to be. wouldn't be as volatile. But hey, it is what it is. I know Nutty Fafa likes gold. He loves gold. So he loves gold. But yeah, this right here, that was a beautiful delivery from this order block, fair value gap. And we got that volume imbalance in here, like a rocket ship. Is there even any level? These are new all-time highs, so it's in no man's land right now. Jeez, look at that investment. Whew. Man, that's wild. It's a beauty, isn't it? Look at that. Yeah, so we are definitely in no man's land. ICT, when it comes to trading all-time highs, pretty much, when you're at all-time highs, because we don't pick highs and we don't pick lows, we go with the flow. That's exactly what you want to do. If it's not retracing and showing any evidence that it wants to go lower, you just push it higher. Any type of shorts should be cut in half, as it would be if we're selling and we see a buy, and we want to participate in the buy in a downtrend, we would cut it in half. But in this case, we're going higher, so any type of short should be cut to half risk, and you should be riding the rampage higher because it's, you want to take advantage of the chaos. When there's uncertainty, gold is going to explode. Okay, because normally the dollar is a flight to quality, right? But because the whole U.S. economy is affected by all the things taking place, the changes, good or bad, however you want to look at it, because the uncertainty is affecting all U.S. assets, dollars also falling when it's supposed to be the flight to quality. It's kind of artificial because I think there's politics inside that reaction as well, because they want people to build the sentiment that, oh, Trump is killing the dollar, when everything he's doing is solidifying the dollar. You know what I mean? He's making it stronger by bringing more investment, by making sure other countries aren't ripping us off. And if anybody tried to get off the dollar too, if we continue to have presidents like Trump, tariffs are going to be a tool that's going to keep the whole world using the U.S. dollar as well. And for the free world's sake, and all these economies that use the dollar as a back-end piece to their economy, they should be hoping and praying that the dollar doesn't fall. Okay, because we don't know a world, especially in the West, where the dollar is not the stable currency in control. And we definitely don't want no communists running that, because we don't really need to have any explanations for that. It would just probably not be the best idea. But yeah, so yeah, we're just gonna keep pushing this high. I don't trade gold at all. I used to try to dabble with it. I have some friends that mess with it, but keep pushing that higher, yo. The only way that I mess with gold is buying actual gold, or buying actual silver. Silver is cool too. Silver moves similarly in terms of volatility. So yeah, let's go see what the weekly looks like. Yeah, we got this wick here. We got that order block. Shoot, man, as long as this area stays, right? As long as this area stays, I would have to say that this fair value gap, this order block, and this swing low are your 3 PD arrays to continue to push price higher. Expect the possibility for this to wick lower into here. Maybe not. This is it's on a tear. There's no real reason to assume that the high is placed in already. I would just continue to really press into price going higher. Any retracement down is to hit the areas in here, maybe run out this weekly low with a wick or something, and then just rocket ship straight higher. Right? So yeah. That's kind of my opinion on that. Let's see on the daily real quick. Yeah, so If you look at this too, delivery to the downside, delivery to the buy side, we really have no real reason why we should break through into this balanced price range. We have a run on stops back above the buy side, so sell side's taken, buy side's taken, and prices just really rampaged higher. So again, I wouldn't really be surprised if we did give some type of rejection into that level. Oh yeah, this is a beautiful view right here. Huge wick overlapping the fair value gap. Again, this is a balanced price range. Also, it's also a bullish breaker. So again, if we do see price decline into that, that's a tradable delivery to get us down into that for a counter trend sell. But once it hits this level in here, you should be expecting to try to see a reason to see price go higher. We have the new weekly open that's going to take place in here, right? It's going to open up, fairly soon. When price opens up, if it declines into this bullish breaker / bullish balanced price range, we should be able to see price continue to push away from that. Now again, line in the sand is down here. If it was to violate all the way down there from the higher time frame, I think it was on the weekly chart. Right, if it was to violate that, that is 3 PD arrays being violated and a balanced price range. It should be holding. I mean, look at this one. This held price. It kept pushing it up because why? It's a balanced price range. It's an order block, right? So that it held price up. So we should continue to be able to see that take place if price is going to want to continue to rampage higher. I believe, at least from what we see here, that that's the case. I would prefer, if I was a gold trader, right, I would like to see this decline first, whether I want to engage that to trade it into this as a draw on liquidity or not. Obviously, that depends on me as the trader. But once it gets down into here, my thoughts are let's try to find displacement to the buy side so then I can take out this previous week's high as my draw on liquidity, because price is going to continue to go higher until it proves otherwise. And I don't pick tops, I don't pick bottoms. So I'm going to go with the flow. That doesn't mean that I won't take a counter trend trade to seek an opposing PD array that may set me up to continue the higher time frame narrative, which in this case is bullish. All right, again, line in the sand for buys to stop for gold, basically confirming that there may be a top in place, potentially pushing price down into sell side interest would be this low. And there'd be multiple PD arrays, at least from this time frame, getting violated in that way. So yeah, what I just showed you guys there is all the same principles we use on these other assets on this asset that I don't even trade. But all the process, all the whole system, right? Everything that we talk about easily translates to us looking at this asset. And then, of course, the bonds and yields have an impact on this too, right? This follows a lot of times what the bonds do as well, or should, right? Let's go pull this up. Let's go pull up the risk on, risk off reference so y'all could see that. Oh, whoops. What just happened? See, so risk on, okay, bearish DXY, bearish bond yields. Bond yields dropping should send commodities higher, stocks higher, foreign currencies higher. Okay, bullish DXY, bullish bond yields, right? Those two are together, should lead to bearish commodities, bearish stocks, bearish foreign currencies. Okay, and this risk off should also have bearish bonds, T-bonds or T-bond futures, whatever you want to call it. And then risk on should have bullish bonds, right? Because it should push stocks higher, foreign currencies higher, and commodities higher when everything is in alignment, right? There's a cracking correlation right now at this current moment. Just because there's a cracking correlation because of all the chaotic stuff that's taking place, does that toss out that specific way of viewing things? No. It just means that we're in a moment where risk is elevated. So we want to wait and keep that in our mind. That doesn't stop us from taking a trade. It doesn't make us fearful. It makes us cut our risk a little bit, yes. But does that make us fearful? No. You know, you don't run into a battlefield when bullets are flying, right? You don't just run up in there like it's an open field. If bullets are flying, right, you got to duck and dodge, like bob and weave and get behind cover and act in a different way. It's a different scenario, you know? So same with this. You know, when the scenario looks a little chaotic, you don't have fear. You just drop your risk by a little bit, you know, or a lot, depending on how you feel about the situation and your current skill set and how comfortable you are with the process, right? But overall, I think this analysis here for gold should be able to serve you well for those that trade gold. And then, of course, I hope that everything we have talked about overall throughout all these other assets, hopefully this stuff can help you out throughout the rest of this week as well. But yeah, with that being said, I guess we will put a ribbon on it. And yeah. So if you guys got any questions, let me know in the free Discord or in my private community. Obviously, you could DM me. Is there anything else I want to talk about? I think I'm forgetting something. I know I'm forgetting something. I'm trying to remember what it was. Maybe I'll remember it later. But yeah, if I remember what I'm forgetting to tell you guys, I'll let you know in the free Discord. All right, and my private community Discord as well. That's gonna bother me. It's gonna bother me for the next couple hours. But yeah, with that being said, you guys, thanks for hopping on. I appreciate all the time you guys spend. Appreciate the support with the channel. Definitely, if you haven't already, don't forget to like the video, subscribe to the channel. If you have friends that like this type of content, if you think this conversation that we continuously have can benefit anyone that you know that is a trader or investor, definitely send them my way. So then, you know, maybe they can add to the conversation, or maybe we can add to their life with the value that we all provide to this community. All right. But yeah, with that being said, God bless you guys. Happy Easter for those that celebrate Easter with us. And yeah, I guess I will see y'all on Tuesday. All right. Till then, be safe. Don't do anything stupid. Remember, the day before, day of, day after a holiday is low probability. Either you don't trade, or you gather intel, or you cut your risk dramatically. Okay. So yeah, that being said, you guys, enjoy the rest of your weekend, and